All right, so the last time, that was on Tuesday, we had the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani. We talked a whole lot about capital gains tax, and we have that clarification there from Mr. Oyedele. We'll have Mr. Rwani joining us again today to help us to see if his views have changed. Mr. Rwani, good morning. Welcome to the program. So we're able to get Mr. Oyedele on the program yesterday, and at first he was thinking that it couldn't have been the capital gains tax that was driving the market downward because it has much more benefits than the existing one. But I guess at the end of the day, we all found that investors needed more clarification, and we saw the market rebound yesterday. I wonder what your thoughts are, or your observation between when we had you on Tuesday and today.
Well, thank you. Good morning, and thank you for having me. The reality is that the market rebounded yesterday, but we do not know whether it was a rebound or a dead cat bounce. So one day's activity is not enough to determine the trend of the market. But the clarification that Mr. Oyedele gave is quite good from a perspective of policy making. It's quite good from the perspective of comparative analysis. But when you're comparing countries, you don't look at just one variable. You look at the wages in that country, you look at the level of unemployment, you look at the level of return, and so many things. So the fact that the government is responding is good news that this thing is not going to go away. But to me, the thing to do first and foremost is probably to shift the date of implementation forward so that it give enough time for engagement and clarification. And secondly, look at whether 30% is a fair tax on capital gains at a time when the total level of capital formation in the country, gross fixed investment, stock market capitalization as a percentage of GDP is very low. If you want to encourage investment, the investment culture, then you have to give something up initially. Then subsequently, when the economy has matured, you can then begin to introduce some of these taxes. So, but that governments should collect taxes is not in doubt. That the Nigerian government tax rate should be comparable to other countries in our universe, yes. But however, the implementation and the disruption effects, especially coming at a time when we have all these other factors playing in, means that we could easily, in my own judgment, defer the implementation for a few months to give us enough time to study it, clarify it, and calm investor nerves. That's what I think should happen.
Yeah, but Mr. Rwani, wouldn't that just be, deferring the evil days?
Well, it's better to kick the can down the road a little bit and have enough time to prepare how to absorb the impact than rush into it, and then the disruption combines with other factors, other imponderables happening at the same time to give us what we can call a financial calamity. But with the clarification by the Minister of Finance and Coordinating Minister of Economy, clarification by Mr. Oyedele helps to calm nerves, but it has not addressed the fundamental issue. One, is the rate of 30%, is it a disincentive at this time? Two, can we segregate it? Why should we implement it on January 1? We are going into an election year or what have you. So it's time to take a deep breath and allow some things settle down before you begin to implement it. We have the 4% tariff that I think that has been deferred somewhat. We have the 15% import levy, which I think should not be deferred, and we'll come to that in a minute. And many policies and regulations that are kicking in at the same time. We've got to be careful so that we don't suffer from policy indigestion this time.
All right, so the longest government shutdown in the U.S. has ended yesterday, and it's been signed by President Donald Trump. Can Nigeria expect any impacts from the shutdown to now the opening of the government and government spending? Can we expect any impact seeping down to us here?
No direct impact, because the U.S. economy is a different stage of development, one, and we are not totally integrated with the global economy, we might say. But the important thing here is that the fact that the shutdown has ended, the fact that economic activity begins to come back, only confirms to me that the December meeting of the Federal Reserve will not reduce rates. And if the US Fed defers the reduction in interest rates till early next year, it means that we as a country, we as and our central bank will have to be more cautious in our approach in 2 weeks' time as to how to address our strategic move as far as achieving macroeconomic stability. So that is one thing. Two, we've seen that the price of oil has dropped, and we've seen that the stock market in the US and other markets have rallied, which means that the uncertainty factor has reduced in the global markets, and we are beginning to see some form of stability, and that the strength of the institutions within the US begin to come out clearly, which means that arbitrary action by any government, UK, Europe, the United States, you will see less of arbitrary action. And that's what markets like: stability, predictability. Right now, we are seeing the whole impact of artificial intelligence, and that whole revolution of the digital revolution is taking place. It's having an impact across all parts of the world. Least of which is its impact on unemployment. And it's quite interesting yesterday that South Africa reported a reduction in its unemployment rate. And South Africa is one of those countries that has suffered a lot from high unemployment, high income inequality, and high level of crime. We are not so far behind, but South Africa is the bellwether economy, the largest economy in Africa. And so what I am saying essentially is that if the US economy goes into a stable state, if the US economy defers the cut in interest rates, that means the dollar stays stronger, all right? And of course, you can see the price of gold coming back from 4,000 all the way to 3,200 and 3,300, which is fair enough. And that signifies to me that the global economy is getting to an era of stability, especially when you know that the US midterm elections are just a year away.
Talking of stability, I wonder if it's a good thing that we see the Naira trading flat, at least at the parallel market at the close of trade yesterday.
Well, the Naira had fallen for about 3-4 consecutive days in the parallel market. But it's not the question of the trend, it's the fact that what's the magnitude of the fall. The total reduction was about almost 7 or 8 Naira. So the investors and traders are taking a view that the Naira is still fairly priced. As a matter of fact, to a large extent, undervalued. So what are they looking at? In the month of December is when we have November, December, when we have the main crop of cocoa. If you look at the cocoa price, there is about 5,700, which is about 50% lower than what it was last year. And cocoa is one of the main non-oil exports. The price of oil is down to $62, which is much lower than what it was about a week ago. LNG is flat. So generally speaking, the fundamentals are not threatening, but they are already blinking. There's some amber lights blinking there. So I'm not totally concerned about the value of the Naira as long as it's not trading above 1,500. It's still at 1460, 1460 or what have you, and that's still fair value as far as I'm concerned. So I wouldn't worry too much about it. The other thing that we need to think about and talk about is what's happening to the price of petrol.
Mr. Ruwani, I was asking if you see the Naira gaining anytime soon, and since it's some good news we've been hearing when it comes to our reserve.
Well, the Naira, for me, first of all, will the Naira be stable before we start talking about gain? The only thing that will make the Naira gain value is if the supply of dollars is far in excess of the demand for dollars. So we have two important decisions to make. One is to determine the level of interest rates. If interest rates in Nigeria fall precipitously, we are going to be seeing that will weaken the Naira because our foreign portfolio investment flows will reduce. On the other hand, if we do not do something to protect the domestic refining industry, that is to ensure that the 15% levy stays there and is implemented on the due date, you are going to have people demanding dollars to pay for imports of refined products. That itself puts pressure on the Naira. So you can't eat your cake and have it. If we say we want to protect the local industry to make them competitive, if we say we want to, in fact, allow the Naira to trade at fair value, then we have to make some hard decisions. One of those hard decisions is the 15% import levy on refined products so that we reduce the demand for petrol, demand for foreign exchange to buy imported petrol. Right now, there are about 20 ships carrying products waiting to berth in Nigeria. So let us assume that their landed cost X, and then they berth and they produce, and then the Dangote refinery, which is the price leader, brings down the price. What happens to them? They'll be selling at a point where their marginal cost is higher than their marginal revenue, and that's a recipe for problems. So I'm taking two questions at the same time. One is the value of the Naira, which I think is stable, and I do not expect any rapid appreciation in the near term. Two is the price of petrol, and three is the import levy, which is there to protect the downstream and midstream sector in Nigeria.
Talking about the price of petrol, at least there's Nigerians have an assurance from Dangote refinery they can have a Christmas with the fair price of petrol and no queues. I guess we can take that to the bank.
Though definitely, one is that the quality of the petrol produced at the Dangote refinery is of highest standards. Two, that there will be ample supply throughout from now till January 2026. And three, that the price will not increase. If anything, I think, touch wood, that there may be another price reduction. And we expect that to happen any moment from now.
All right, and how do we expect all of this to seep into commodities prices?
Well, the truth is that if you look at the commodity prices, as you can see up there, you would find that, technically speaking, we have rice still constant at 70,000. Remember, we talked about last time, at this time last year, rice was 110, thanks to the Indians lifting the ban on the export of rice. And this will flow through till first week or second week in December. We do not expect the price of rice to increase for more than 75,000 throughout, even during the Christmas season. Beans is flat at 65,000, and tomatoes is down sharply to 65,000, while a bag of pepper is staying flat at 30,000 naira. Gari is at 20,000 naira. So, generally speaking, the price of food commodities have come down and staying down. The point is that do people have the income to buy the food? So, quantity matters, but quality matters more. Because if you eat junk, you end up being a junket if you're not careful.
You end up spending more money for medicals, money that you didn't spend.
Tell me about that.
Yeah,
I'm telling you,
Mr.
quality of food matters.
Yeah, go ahead. Go ahead, please.
I said quality of food matters, quality of life matters more. Right?
Sure. So, I mean, just before we let you go, I read somewhere that the federal government has formed a committee for Dirty December. How much do you know about this and what can we expect? Because Christmas is coming. We've been talking about the creative economy and the potential that it holds, especially at festive period. So it's interesting that the federal government is also looking that way. But I wonder what the committee will be doing about Dirty December.
Well, that's the thing about Nigeria, always a dollar short and an hour late. If you are talking about setting up a committee for December 2026, I can understand. December 2025, those who are coming have already bought their tickets. Those who are, they are already concerts and everything. So what is the committee supposed to do? Apart from the committee is made up of people who do not know what they want to do and probably do not intend to do anything. So that's the normal joke. But good to have a committee, but quite frankly, committees do not achieve much, especially when they are being set up a couple of hours before or few days to Christmas. Everybody in Nigeria knows what they're going to be doing on Christmas today. So we don't need a committee to tell us that. So I think the committee should focus more on what's going to happen in December 2026 so that it can have an impact. Right now, it's just going through the motions.
Well, maybe they want to study 2025 and then they'll use that to have a roadmap for 2026.
That's the job of a think tank, not a committee.
Okay, all right, Mr. Bismarck Rwani, Chief Executive Officer of Financial Derivatives Company. Thank you so much for your time on the program.
Thank you for having me.
All right, let's take a break now. When we come back, you really need to join us because what are some of the banking fraud risks that you are exposed to? You may fall for. You really want to know that. We'll discuss that after the break. Please stay with us.